Welcome back to Stock Tips with AP. Let's get into it. Today I want to talk about another one of my core income positions, Hercules Capital, ticker symbol HTGC. Okay, Hercules Capital is one of my big three. You know what I'm saying? If I had to categorize it as something, to be the big three. But as of today, I'm holding approximately 569 shares. I got a market value of $8,824. You know, I'm having a total return of negative $1,060.67 or minus 10%. I lost on it yesterday. Today is red, as you can see. So I also, this is a business development company. I hold alongside ARCC and PFLT. HTGC specializes in lending to venture-backed technologies and life science companies. So instead of just lending to random mid-market businesses like ARCC, HTGC is lending to the next generation of tech, biotech companies, the kind that aren't public yet but need growth capital. So kind of like an OpenAI, Anthropic, just to name some big players that's coming to the market that HTGC might have invested in months, maybe years ago. And that's what's so key about HTGC. They help invest in the early on parts of these businesses and get return. HTGC pays a quarterly dividend. Current yield is roughly 9 to 10% on 568 shares. That's meaningful quarterly income that flows right back into the account and gets reinvested. So let's go down here to the finances. As you can tell, I'm on Robinhood. So you see once again that I did market buybacks. And then we come over here in and type. I just do what I can do on that. So I had a dividend of $219.29 on 546 shares. It gave me 40 cents per share. I bought 14 shares at a price of $15.62. And then they have, I think it's called like a special. So then I also had a special that gave 7 cents, and I got $38.38, and I only got almost 2.5 shares out of that. So let's go back. So back to Hercules Capital. Now, you might be asking, why hold 3 BDCs? Simple. Diversification within income strategy itself. ARCC lends to mid-market companies. HTGC lends to venture-backed tech. PFLT focuses on floating rate loans. If one sector has a rough quarter, the other can carry the income. So risk-wise, I know it looks like it's got a lot of risk. BDCs are sensitive to interest rates and credit quality. As y'all notice, I'm down 10%. Credit and interest are up and down in this current market. So if the income slows or borrowers can't pay, BDCs can cut dividends. I watched this. As you can tell, I think it went up and then now the price is down. So we have to wait till the next one come out to see how HTGC manages with the down 10% from that 1736 price of my average at least. But historically, HTGC has had one of the more consistent track records in the space. That's where I'm at with HTGC. Drop your favorite BDC in the comment. I read every one. Hit the subscribe. If you're following this journey, let me know what BDCs you hold in your portfolio or some that I should look at or maybe shoot some content to. See you on the next update.